Welcome to Finance Gyan Plus YouTube channel. Today I have brought a problem related with financial ratio analysis. So now let's see the problem here. This is the question related with financial ratio analysis. So informations are given here. So let's see the question. The following data applied to Sagarmatha company rupees in million, cash and marketable securities rupees 100, quick ratio 2%, sales rupees 1000, current ratio 3.0, that is 3%, fixed asset rupees 283.50, days sales outstanding 40 days, net income rupees 50, return on equity that is 12%. So calculation is based on 360 days. Sagarmatha has not issued any preferred stock. So these are the information given here. By using these informations, you have to find the required here. First A is account receivable, B current liabilities, C current asset, D total asset, E return on asset, F common equity, and G is long term debt. So these informations you have to find by using the information given in the question. Okay, now let's write here, let's solve this problem. So to solve this problem, all the givens are here in the question. So you can write according to the question to solve this problem. So here now for solution, you can write here according to the question, here you have to first find the account receivable. So here A, calculation of account receivable. So to find account receivable, you have to use here days sales outstanding. Days sales outstanding is given here, so you can use that days sales outstanding to find the account receivable. So here days sales outstanding, DSO. So here days sales outstanding, you have to know the formula. So here account receivable into days in a year, divided by annual credit sales. So this is your formula for calculating days sales outstanding, or days sales outstanding is given here 40 days. Account receivable, you don't know, you have to find it, into days in a year 360 days, and divided by annual credit sales. So annual credit sales is not given here, but sales is given here. So here annual credit sales must be equal to sales. So you can write sales as a annual credit sales for finding the account receivable. So annual credit sale is 1000. These all details, all these rupee amount are in million. So here this is 1000 million here. So you can write here now, or account receivable equal to 40 into 1000 divided by 360. That will be your here 40,000 divided by 360. That is your rupees 111.11 million. So now account receivable is, therefore account receivable is rupees 111.11 million. After you find the account receivable, next you have to find is the current liability. So now let's calculate the current liabilities. Calculation of current liabilities, shortly you can write CL. So to find the current liabilities, you have to use quick ratio here. So here quick ratio is given here. Quick ratio QR equal to quick asset quick asset upon current liabilities, or you can write here, or current liabilities CL equal to quick assets upon quick ratio. So now here quick assets. So to find the quick assets, now let's see the items given in the question. So here quick asset is cash and marketable securities, and another item is your account receivable, which is you have found here in A. So here now quick asset you can write here, or current liabilities equal to quick asset equal to cash and marketable securities plus account receivable upon quick ratio, or current liabilities equal to cash and marketable securities is your 100 rupees plus account receivable is your 111.11 divided by quick ratio is your 2. So here therefore current liabilities is your 211.11 divided by 2, that is rupees 105.55 million. This is the current liabilities. Okay, so after you find the current liabilities, you have to find now current asset. So here let's find the current asset. This is a problem from the old is gold. Okay, so you can find this problem in old is gold question collection. So here now for here calculation of current asset, calculation of current assets CA. So to find current asset you have to use current ratio. So here current ratio CR equal to current asset upon current liabilities, or current assets CA equal to current ratio into current liability. That will be your current ratio is 3 here in the question given, and current liabilities is your 105.55. So that will be your rupees 316.66 million. Okay, 665 is there. I also can write here 665 million. So this is the current asset. Therefore current assets CA is rupees 316.665 million. Okay, now after you find this, then you have to find is total asset, the calculation of total assets TA, shortly can write it TA. So total asset TA equal to current asset plus fixed asset. Okay, current asset plus fixed asset, or you can write here, so you can write here with completely current assets plus fixed assets. So here current asset is your CA here 316.665 plus fixed asset. Fixed asset is given in the question. So here in question you can see 200 rupees 283.50 is the fixed asset. So now just add this. That is your rupees 600.165 million is the total asset. Now after you find the total asset, you have to find the return on asset. So next is your calculation of return on assets, that is ROA. So to find return on asset here, return on assets ROA equal to net income upon total assets. So net income is also given in your question here. In the question is given here, net income is 50 million. So here 50 divided by total asset 600.165. That will be your 0.0833, or you can write 8.33%. So this is the return on asset. Now after you find return on asset, next you have to find is common equity. Next you have to find common equity. Calculation of common equity. So you have to find common equity. You have to use return on equity, which is given in the question. Here return on equity ROE equal to net income upon total equity, or you can write common equity. Common equity. So here now net income is 50 divided by common equity, or you can write here common equity equal to 50 upon return on equity. So in the question it is given there, in return on equity is 12%. So here now 50 divided by 0.12, 12%, you have to write in decimal. That is your 50 divided by 0.12, that is your rupees 416.667 million. Okay, so common equity here, therefore common equity is rupees 416.667 million. After you find the common equity, next you have to find is the long-term debt. So long-term debt is asked here in a question. Calculation of long-term debt. Long-term debt of the company. So here to find long-term debt of a company, you have to write a relation here. So here current liability plus long-term debt plus common equity equal to, it must be equal to total liability and equity, but here total liability and equity is also equal to total asset. So you can write there in place of total liability and equity, you can write here total asset, total assets. So now let's put the values. Let's put the value. Current liability is 105.55 million plus long term debt. You can write it, no need to write area, just write this. It's million here. So plus common equity is 416.667 million, that is also, and total asset is your 600.165 million. Okay, so now long term debt plus, here let's add these two, 105.55 plus 416.667, that will be your 522.217, that is equal to 600.165. Now let's solve this equation again. Or so here, or long term debt equal to 600.165 minus 522.217. So therefore long term debt equal to 600.165 minus 522.217, that will be your rupees 77.948 million. Okay, so in this way you can find long term debt. So if you like my videos, please like, share and subscribe.